impact our trading. All right, and we'll take a look at a couple examples that I'm going to use here. So let's get started. I believe YouTube should be up and running, so we should be all good to go on the streams. Q's down 0.35, was initially gapping up and got a little bit of follow through higher at the open, and then you can see the SPY showing relative weakness got sold even more than the Q's and SPY. Okay, you can see SPY here back into the lows from the last couple weeks, and Q's also back down to the low from last week. Coming into today, we had a bearish bias. We've had a bearish bias since we broke here. We got the gap down. Any kind of retracement or run up should be a shortable opportunity, and so far that has played out. Now, where we change that approach is if we get over 180.92 on the Qs and over this on the SPY, which is 287. So 287 on the SPY here. So we never broke that. And so we've just stayed bearish since the second half of last week, really. So we tried to go higher, and then when we got this gap down, that meant no more follow through on this attempt at a buy setup. The buy setup failed, and then run-ups were going to be shortable. So we've been bearish basically since all of last week, and carried it into this week, right? I think the last couple updates on the market bias were that there was no update, that we were still using the same line in the sand formed from last Tuesday, and that until we break above that, we're just going to remain bearish. Now, I just want to talk a little bit about our biases. And so one bias, or one way that we use it, is that we commonly talk about a market bias. That means what we're expecting from the market. We're expecting it to go lower, and kind of the biases I want to talk about now is going to be a little bit different. And so something like what we got last week, when we got this here, my expectation, even though that the market here was putting in a bearish pattern, looking to continue lower, right, clearly moving from the upper left to the bottom right, that's the direction we were moving, that we probably wouldn't follow through, and that we would break higher and go neutral. Now, that's a good example of a bias that, maybe I think the market is too sloppy right now. Earnings season is over. Into the summer doldrums, we usually get more sideways and lack of follow through. So the difference there is that I know what the pattern is saying, and then there's also kind of my own expectation. And so the important thing was, I go with what the chart is saying. The chart was saying lower, right? So we go with the bearish bias, right? I don't overcomplicate it by saying, well, it's this time of year, so we're going to ignore the charts or anything like that. So the reason that I brought it up today is because something like this SEAS, which is SeaWorld, right, was a pretty good pattern here. There's actually a call from Sammy to be played over this base here, right, over this base. And to be honest with you, I had a hard time wanting to play this long. I had a hard time pulling the trigger on this because I just don't really feel bullish on SeaWorld. I think it's because of documentaries I've seen that question the how ethical it is and things like that. And is that really what's relevant here to this chart? Is it really what's relevant to right now? And do I even have all the information in that case? I know SeaWorld does a lot of kind of animal rescue and rehabilitation and things, and it's not just all about amusement parks and keeping orcas in captivity or anything like that. So it's easy to get kind of influenced by these things. And if your goal is to trade the charts, to trade the patterns, those things are still going to creep up. That's why a lot of traders don't even want to know the news. They don't really want to know the news. They just want to know what the footprints of money are, what is price doing, right? Where are market participants committing their money to? So really, it's kind of what money is doing, what the market is doing, has interpreted all those all that information for you. And so it's one of those things that it's hard not to have a bias on these things. And it's kind of one of those things that we just have to constantly be aware of. Okay. Because I know on this, really, I think the only reason I didn't play it was, I just hard for me. And even this is a day trade. So does it really matter how bullish I am on SeaWorld as a, company and what their morals are or anything like that? It really shouldn't matter. I'm here to trade the stocks and the price. And so, I just wanted to point that out because I did think it was something that we haven't really dealt with as far as the market wraps and some of these additional topics that we go over. Another example that we came across last week was someone played this MAXR long. I think they played it after the pullback. And she said that, oh, I read that they have a lot of debt, so I'm going to get out of it. And her and I both agreed that it looked higher. I think she got out of it like around here. And I know it's one of those, I think, she's pretty confident in her decision making and what she's doing, so I'm sure it didn't bother her. But it's one of those things that if the chart, and we both agree that it looks higher, right? And now you're kind of reading some kind of headline or report about it. Is that the kind of management that you have where, oh, if I see some kind of red flag or something like this in their fundamentals or in their last earnings report, that I can kind of exit arbitrarily? And I think that puts a lot of pressure on you to get across all the information that you need in a timely fashion. I mean, what if you, came across that information any earlier and you thought, okay, that's a good reason for a short, even if the chart was telling you that we're running up, so it's one of those things that as especially a trader that's focused on the technicals, right, that we have to kind of understand our biases, especially when they're against the market or against what the price action is telling you. Okay, so, I think you can see that sometimes that I'll have my own biases, right? I wanted to use the SEAS as an example, or even here when I was looking at the market and I said, we're moving lower, but I think that we'll probably break out and then we'll go to neutral and, then it'll probably just not go anywhere because I thought the market had kind of run out of steam. But the important thing was, right, we went with the bearish bias because that's what the chart said, right? And if I had just strictly gone with what the chart said on the C's, then yeah, that was a really nice play that Sammy called for the room, right? And same, with the MAXR, this is telling you that was going on. I think they had struck a deal with NASA, I believe. Somebody that had struck a new contract. And this was staying very bullish, breaking out of this base and not going lower, so closing up here near the highs. So, I just wanted to bring that up because I think it's something that, as great as it would be that we were just all kind of a clean slate and didn't have attached special significance to certain things, we were completely objective about things. We just have to recognize that sometimes those other biases can influence us, and always have to know kind of where they're coming from and if they're valid or not. And so it's not that you won't have biases that are wrong, right? And we'll see that time and time again, that the market looks lower, gives us a certain pattern. Like at this time, I was thinking, okay, if this market is higher, if this buy setup follows through, it did trigger, and then it failed. So that market approach or our expectation of it going higher proved that that wasn't going to follow through. And so we have to kind of shed that approach and change what we expect from the market. But some of these, like C's, for me, are a little bit more rigid. And so sometimes these rigid kind of approach to these symbols and the significance that we attach to them can be detrimental to our trading. So I think it's something that we should all be aware of. Sometimes I do feel like I trade the symbols better, the stocks better, when I don't know what the company does, when I don't know, what industry or sector. I mean, it's good to know what the other maybe competitors are, but in general, if I don't know what the company does and it's just a stock with price action and patterns, I think that's when I actually trade the best, you know. So I totally understand there's a lot of traders who just don't even want to know what the news is because it really only serves to kind of make things overcomplicated and reduce the simplicity and the focus from reading the charts. Okay. All right. So I hope you did well today. I thought we did a pretty good job in the room making something out of not a whole lot today. You know, the C's, the NTNX. NTNX was the favorite coming out of lunch here. That was a nice drop on the NTNX, closing here at the lows here. So got that breakdown there as we got out of lunch, closing here at the lows. Good gap on the NTNX. So I thought we did a good job. There was some kind of sloppiness in the morning, and I think especially being patient helped us get through that. So hopefully you did well also today. We'll see what the market brings us tomorrow, and I will talk to you then. All right. Have a good evening.